today's Home Pathshala. It will transform your dream into reality.
Good afternoon, my dear student. Today we are going to learn the capital structure. Now, what do you mean by capital structure? Capital structure is basically a mix of long-term debt and equity. Long-term debt and equity. Capital structure denote long-term fund of the firm. The equity fund means capital and owner's capital, and long-term fund or borrowing capital. The two types of fund, equity fund and owner fund. And capital structure shows what percentage of firm capital is equity and what percentage of firm capital is the debt. The percentage of fund equity and debt. These are the two important concepts, equity and debt. Look at classification of capital structure. Capital structure can be classified as simple classification. Simple classification based on equity share and retained earning. Equity share and retained earning. Second, the complex capital, equity share capital plus and owner's liability. Classification based on sources, internal sources, capital reserve and supply. Capital reserve or surplus income or surplus means a retained earning. Retained earning. External capital means the debenture and long-term liabilities. Classification can based on the ownership capital, equity share capital, retained earning, debt capital, debenture and long-term liability. These are the important area of the capital structure. Okay. Next, what are the important features of capital structure? The important features of capital structure features can be identified the profitability. Profitability, one of the important features of capital structure. The cost of financing is minimum. Cost should be minimum and earning per share. This is a very important EPS. Earning per share should be maximum. EPS, earning per share, should be maximum. If I can minimize the cost, then we can increase the earning per share. Next important area, the flexibility. Flexibility was able to adapt according to changing the position. That is called the flexibility. Third is the conservatism. Debt contained the capital structure should not exceed the limit which the company can bear. Because we are working with the debt capital. The debt capital is a highly risky. So we'll have to keep on our mind not exceed the limit which the company can bear. Next, in the solvency, capital structure is the owner's capital and borrowed capital. Main point repeatedly come, the capital structure is based on owner's capital and borrowed capital. Borrowed capital should be used carefully. What are the important factors of capital structure? Important factor of capital structure is the financial leverage, operating leverage. In my next class, I will discuss the financial leverage, operating leverage, types of leverage, combined leverage, EBIT and EPS analysis. EBIT means earning before interest and tax. EPS means earning per share, cost of capital, growth and stability of share, cash flow analysis, flexibility, control, size and nature of the company, marketability, flotation of cost, legal constant and capital market condition. These are the important factors of capital structure. Next important area, we have to remember that these are the important factors and detailed analysis, the factor financial leverage, operating leverage. Now we are going to the capital structure. Important. What are the important component of capital structure? Important component of capital structure is the debt financing, that is called the leverage, borrowing fund via bank loan, issuing bond, equity financing, raising through issuing stock using retained earning, preferred equity which does not require payment but dilute ownership. Optimal structure, strategically balancing debt and equity. Capital structure is the main objective to balance between debt and equity to lower the weighted average cost of capital. This is a very important WCACC, weighted average cost of capital. For example, cash-rich company like Meta may still borrow the billion to finance AI infrastructure while maintaining an efficient mix, optimal structure. Important related concept we have to study the capitalization, financial structure, capital mix, leverage structure, and capital structure design. Our next important area is a very important capital structure, difference between the capital structure and financial structure. Capital difference. What is the difference between capital structure? A mix of capital structure is a specific mix of long-term debt and equity of the fund of company, permanent operation. And in the contrast of financial structure is a border, total mix of the liability including short-term debt and current liability plus equity. Capital structure is a subset of financial structure. What is the key difference? The capital structure is a long-term debt plus equity. And financial structure, total debt plus equity, long-term and short-term debt plus equity. What are the scope of capital structure? It is narrow. It is narrow and for long-term fund only. And financial structure, it is a broad, short-term plus short-term fund, long-term plus short-term fund. What are the important component of capital structure? Long-term debt, equity, retained earning. What is the important component of financial structure? Capital, mainly structure, capital structure component plus current liabilities like account payable, short-term loan. What are the purpose of capital structure? Analyzing long-term solvency and capital optimization. And what are the purpose of financial structure? Reflect the entire financial position of a company, industry, and financial strategy. Capital structure in the case of time horizon, long term only. Or in the case of time horizon, financial structure, long term plus short term. Relationship, important relationship, capital structure as a part of financial structure, and financial structure the entire asset and liability. These are the important topic of the concept of capital structure, concept of financial structure, and comparative study of the financial structure and capital structure. And financial structure important component, the capital structure, debt, equity, and working capital. Importance of financial structure, risk management, and cost management. So what we have learned? We learned today the concept of capital structure, important component of capital structure, important features and importance of the capital structure, and capital structure, financial structure, important concept of financial structure, and comparative study between capital structure and financial structure. Thank you.